Well, good morning, everyone. Welcome back to our Monday morning trading room after a little break there at the beginning of July. I hope everybody had a nice week off. Allow me to get the screen share up and running. For those of you who are new in the room this morning, welcome. What you're looking at here is the complete DTS system along with the Raptor. So here on the top left, I've got the Hawk Scalper, top right, Falcon Swing Trader, bottom left, Eagle Trend Trader, and then of course the bottom right, the Raptor. The markets I'm watching here are the NASDAQ. I've also got the E-mini, S&P, and crude oil going on my other monitor. But please don't be shy about asking for a market that you might be interested in. So the NASDAQ just opening up here and kind of bouncing around a little bit. Fairly neutral overall. It looks like the market's been trading a little bit sideways here. You can see we've actually produced a cloud crossover signal right out of the gate, right at the opening bell. And now we've come back with a counter trend signal. This is not that uncommon around the open as the market tries to get some direction. Okay, so for you Raptor traders, we're getting another cloud crossover. You see how the soft edge of the clouds have crossed? Now we're getting that little bit of a retrace, which is characteristic of a cloud crossover. We're also producing a warning dot. No signal just yet. We do have a first micro-macro cross here in the Hawk, which I'm going to be too late on, so I'll just continue to focus here on the Raptor. I thought we were going to get a cloud crossover signal right here. I guess all the pieces weren't in place to make that happen. All the ducks not quite in a row yet. Okay, so we're going to get another little bit of a pullback. The first micro-macro cross signal looks like it did get high enough to find the scalp target. I guess our first in-sync eagle signal occurred right here. This would have been the first signal of the morning, or was that still pre-market? No, just 43 seconds into the session. So the eagle still very, very bearish. Or more bearish, I should say. Very, 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 very bearish. Might be a bit of a stretch. All right, here comes, there's the cloud crossover signal, and can I do that? All right, now this is the first signal of the day. The market seems to have a little bit more momentum. So what I'm going to try to do is I'm actually going to try to ride out this trade. See if perhaps it will give me a little bit more follow through. And we're only 5 or 6 minutes into the session, so this is a very early trade. Someone was asking me the other day about looking at the market pre-market, should I analyze the market pre-market? Should I have a plan on the day? I know the internet is full of stuff like that. My experience is I do worse when I have a bias on the day. If I look at the chart and I do pre-market analysis and I look at the daily and the weekly and I say, okay, the market has to do this today. It's going to go higher or it's going to go lower. Those are the days I tend to do not very well because I'm not leaving myself open to what's actually going on the chart. All of a sudden I'm just looking for those trades that are going to fit my analysis. Great story about a trader, and I really wish I could remember his name. It was interviewed for one of these trading magazines, and he was the best trader on the floor. And what was so interesting about him is that he would not be what you would consider to be a smart fellow. And they asked him about this. They said, you're just an average person. Here's all these Harvard and Stanford grads, all these A+ students, and you're outperforming them on the trading floor. Why is that? Because he was like a C+ student. And he says, as a C+ student, I was used to being wrong a lot. It didn't bother him when he was wrong. It was just, he was wrong again. And yet these smart people had a hard time admitting when they were wrong about a trade. They couldn't bring themselves to get out of a position, or, like I said, they may have started the day with a bias, and that affected their performance. Well, see, here I go again. Had I left my profit order in, I would have had my profit on target. Now I've got a little itty-bitty test at the extreme. I got the market trying to push the other way. Buyers and sellers really trying to sort things out here at the moment. On this next push, if I get another push higher, I'm going to be a little bit more aggressive on my stop. It'll be time to start bringing the stops in. And the sole purpose of the initial stop is just to give me some staying power, to give this trade a chance to work out. Looks like the seller's putting some pressure on. We'll put that on the shelf. Oh, we are getting a first micro macro cross lower. We're into the hard edge on the Eagle and the Raptor. Why is that significant? Well, whenever we encounter the hard edge, we usually expect the market to give us some sort of reaction. By the way, the target for the counter trend signal is the hard edge. You can see sometimes when it develops closer to the hard edge, there will be greater follow through, but that's the initial target. So it's not always a worthwhile trade. When the band gets good and wide, then it tends to work out a little bit better, offer a little bit more profit. Okay, so here come the buyers. Let's see whether we can get a push. Here we go. So here's the hard edge bounce. Let's go. Now, if you're looking sometimes for places to add to positions, the easiest places to add extra contracts is, in this case, because we're buyers, above the swing high. I suppose you could have added on another one right here. You can also use the signals. So we've got a hard edge bounce, a number 3 signal. You could add another position here, bring in your stops so that your overall risk remains the same or approximately the same. You do have more options to you when you are trading more than one contract. So I'm trying to do my best here this morning to be patient. Oh, I got it. Come on, you guys. So we got a real seesaw thing going on here. Buyers trying, or pardon me, sellers trying to push back. Come on. Get up there. Let's go. All right, so this signal, in theory, another hard edge bounce. We're not getting the prompt because the clouds are starting to cross a little bit here. Wow, the seller's really trying to lay it on here. Getting another bar coming lower. Geiger counter swinging hard to the upside. Let's hope that gives me a little bit more follow through. I hope. Ooh, come on. Get up there. Give me that pushback. All right, so is this going to be a triple bottom for the market? Is that going to spur some buying? Or are the sellers going to knock the market down below the lows? So they're, yikes, starting to flush out some of the buyers now. So we'll see here in a moment whether any of the buyers come back as we get back toward the lows of the morning, back to the median line. Peter says, "Hi Eric, I'm finding that following the trade forecaster is pretty reliable. Yeah, most times it will nail it. Right now, trade forecaster saying we are in trend mode for almost an hour. So what that means is very often we will see a nice progression like we're looking at this morning. Actually, we got a decent progression higher and we're making a decent move lower. But typically it refers also to the degree of pullback, where the market doesn't tend to pull back quite as deep. Oh, Peter says, mine says scalp. Well, there is one setting here on the trade forecaster, and that's your open time. I do believe that's the only change you can make. All right, I'm about to get spanked here in a moment, and then we're going to come back with a cloud crossover to short. Let's watch the carnage. All right. Sorry, just had a little housekeeping to do. Put that away. And it looks like they just got low enough to just below the low of the morning. And now we're kind of floundering again. Saw that nice move lower, and now all of a sudden they are reluctant to follow through. Hmm. Okay. This is sort of a number two signal. It didn't really print. I'm not sure why not, but it is a counter trend signal. We have something resembling a trend. We have had a test of the extreme, and now we've come back with a buy signal. We do have an opportunity on a second push to buy this one as well. The second push simply means we allow the signal to engage, see where the market reacts, and then we look to buy in or sell above the recent little swing. Oh, and now we're getting the crossover sell. So why don't we try to stay with the trend? Oh, come on now. Are they going to give me a second chance to get in here? I suppose I could set it up like this. And that's out of reach now. All right, well, we're just going to have to... Hey, not having any success. All right, here we go. We'll just throw the short order on. We'll do this. Sometimes it's almost more convenient just to use the buy and sell market buttons. So here's a problem when you get into a trade too late. See, ideally my entry was right here. And my stop's a little bit tight. I may end up rolling them here above the primary resistance zone. We'll see if we get a reaction here off of the hard edge. There will be some resistance here as prices try to come back. I don't want to see them just break the high and then react lower. Come on. Like I said, there is some resistance up here around this 56.70 area. And hopefully that will knock the market down. Anthony here suggesting the NASDAQ going to 56.42 quarter. Well, that would be our primary support line. That would be helpful. Well, it's been a slow but steady morning. Wow, just not getting the follow through one way or the other, which is a little annoying. All right, so we're getting another little hiccup through here. You can see the hawk actually produced a couple of signals. It may well be the tool to focus on today. I know there's a few more Raptor traders in the room, so I'll stay here with the Raptor. Where'd everybody go? Well, obviously what I'm looking for here is for the sellers to come back into the market. And they're thinking about it. You know, sometimes half the challenge with a day like today is just holding on long enough. So what's likely to happen is we're going to get one more test here, and then the market will either head lower again, or it's going to try to rally back to the highs, in which case we're going to see a rather sideways trading session. Yeah, sorry, I don't have much to talk about here this morning. One second. Sorry, had a sneeze coming on there. Kenny says, always enjoy your education and training. Yeah, not much really to talk about here right now. I'm kind of taking the long view, or trying to take the long view, in that I'm not trying to get in and out of trades quickly today, but I'm starting to get the feeling that I should have just been grabbing profit when I had it. Because they're being a little bit stubborn on the follow through. Anthony says, yes, the sellers rule. Well, we'll see. I've been stuck on the sell side. Overall, the market's still very bullish if you look at a longer term chart. Good question here from Jeff. Jeff asked, good morning, Eric. Any thoughts on the Russell 2000 moving to the CME from ICE? Yeah, I think it's great. The CME is probably the largest exchange, or one of the largest exchanges in the world. Not that ICE is small time, but I think the CME is where you want to be. And now that it's going to be on the CME, I might actually get the data feed. It'll be bundled with my data. That's one reason I've always avoided trading the Russell, is it was another data feed. Yeah, and like Peter says, and expensive too. To get data feed from ICE just for the one market. You know, unless you're trading Brent crude or the Russell, it's really not worth the additional expense. A lot of traders think the Russell is a purer market because professionals tend to lean that way, but whether it is or it isn't, the markets all kind of move as a group anyhow. The Russell index isn't going to move contrary to the Dow or the S&P. It may move a little contrary to the NASDAQ from time to time, but even then it will come into sync. Paul says, I'm not getting a target. The stop, break, even, and entry are all there, but no target. Okay, well, your target is going to be relative to how you have your trades set up down here. So first, make sure you have a profit objective. And if you want to be guaranteed a target, make sure you're in here at 100% all in, all out. Then when you set up a trade, you will always have a target. I suspect that it's down here that the issue lies. Yeah, you could be right, Kenny. Kenny says Yellen to testify later this week, hence the market might stay ho-hum until then. The market has been really kind of slow anyways. If you took a look at the trading last week, we had a couple of brisk days, but by the end of the week, the market just started dragging again. Well, we would get a little bit of a move, and then it would go sideways for a couple hours, and then a little bit of a move, and then drift for another half an hour or an hour. Okay, Paul says, I had a 20-tick target on 100% all in, all out. Then try this, Paul. Refresh your Ninja script. You can right-click on your chart, and you can pull down here, or you can just hit F5. It will do the same thing. And what that will do is it will prompt you, do you want to reload your strategies, and yes, you do. And what that will do, it will reboot the trade manager. Okay, well, we drifted all the way back here to primary support. If we can see the market tail off here a little bit, say get back down here to 56.68, 56, or below 56.70, we might have a chance here at another leg lower. What that would be is a very drawn out test of the extreme. So the high of the morning back here, market retesting now. Okay, they're going to give it a try. Come on. They're trying. Ay, come on. Just again, not getting the follow through. A lot of sideways trading here. Pardon me. No. So 5670 going to be a number that we're going to pay attention to this week. Was an important number back here as the market hung around the 5670 mark before falling. And now we're back at 5670 and the market's still thinking about it. But so far uncommitted to the move lower. It looks like they're going to run the highs again, try to get back up toward the highs of the day. Shoot. Tagged me twice. Stinkers. Yeah, Paul says the YM has been stuck on one bar for 22 minutes. That's kind of the theme here this morning. Tony asks, good morning, Eric. Welcome back. Thank you, Tony. What time did you get into that short? Well, that was back here just before the top of the hour. So, yeah, that was a half an hour of watching the paint dry. You know, the stupid thing is I still think we're going to see the market try to retrace here. Especially as we get a little bit closer to the highs of the morning. Well, Aspen, you are a very astute. Aspen says, I prefer not to trade from the end of June to the beginning of September. The market doesn't act properly. You are correct about that, my friend. Summertime, the market's very dull, very quiet. I'm gonna take a different tact tomorrow. So here we go. We've got a crossover signal. This is now the number 2 sell signal, and I I have to try to run this one out only because I've dug a little bit of a hole for myself, and I need to try to see if the market will come back down here and retest the lows of the morning. Anthony says, well, I see the crossover is about to develop with a 3-period moving average, so I'm looking for a downtrend. All right, well, let's see what happens there. I'm going to actually set a profit-taking order down here. Yeah, Aspen says the big boys are having fun. You know, I've said this before, and it's not an excuse, but sometimes as a trading room moderator, you feel a little bit pressured to put on trades, especially since I realize my trading style is not the same as everybody's. A lot of people, they like the action, like Mike Filigera, for instance. Mike Filigera's probably done 24 trades by now, but that's the kind of guy he is. Right? He likes to go in, he'll take the signal, he'll scalp 5 or 6 ticks, or maybe 10 ticks, and then be on to the next signal. And that's what he does. Like I said, my style is a lot more conservative. I tend to try to place fewer trades because for me, I found that's what works. So starting tomorrow, I'm going to try to have that mindset, even if it means sitting here in the trading room for a half an hour or 45 minutes without actually taking a trade. Usually it takes about 15-20 minutes, I find, for the market to develop enough that it produces a signal that's worth taking. And if it wasn't for a lot of times for people expecting the trading room to open when the market opens, I used to just wander into the office about a half an hour after the open. I would never be there for the market open. Come on. Doggone it. Still no follow through. They should try to head lower from here, though. We should see one more itty-bitty test of the extreme, and then the market try to tail off. Why do I say that? Well, it seems to be the sideways nature of the market. As we get toward the upper end of the trading range, the tendency will be for prices to try to get back down to the lower end of the trading range. Hey, way to go, Peter. Peter says 7 scalps on the Raptor trades, so 7 out of 10 just by taking a scalper's profit. Here comes that little retest I was mentioning, and we'll see now whether the market fails at this point. Peter says, unfortunately, I didn't take them all. Well, that's all right. There's always another trade. That's one thing about trading. You should never feel like you have to do something. There's always going to be another opportunity there. Yeah, they're just really happy moving sideways here through the morning. We are going to get a move here in a moment. If I can hold on long enough. Okay, my stop's a little bit cozy. I know it is. I'm going to put it above the high of the morning. It's only a single contract. I know that's within my risk parameters. Come on. See, the Geiger counter, it was trying to push here to the short side. But so far, okay, a little bit of a breach here above the high. All right, here they come. We might even produce, oh, I was going to say a red bar buy signal. So we have a red bar buy right here on the hawk if you were looking for another shorting opportunity or a chance maybe to get in a little bit earlier. You could short below that low. Everybody pretty evenly matched here this morning. Excuse me. Yeah, see you, Aspen. We'll see you tomorrow. Hopefully, we will see a little bit more volatility come back into the market. The good kind. The follow-through kind. Ay, come on. Just not getting the, like I said, the follow through on any of the positions here this morning. A little annoying. Paul is asking, what kind of monitor setup do you have? I know everybody thinks I've got the trader's screen, with the 6 screens, which they're very cool, I have to admit. But no, I'm running 3 monitors. I've got 2 21s and a 24. And I have charts on 2 of the monitors, and then the 3rd monitor I used for the screen sharing software and miscellaneous things. It's a very personal preference. I know Ray Burke had the Trader's screen array with the 6 monitors, and it was very cool. No, they're insistent on pressing the highs now. Scoundrels. Just not getting that love I normally get from the market. Piotr asks, Eric, last year on the 9th of November, we had a very big volume where we got a nice run on the Dow Jones, but a couple of sessions ago we had a big volume too on the Dow Jones, just to the downside. Do you think it can matter in a short period of time? Well, here, let's build a chart and we'll take a look at that. A lot of traders are wondering whether the market is getting toppy. Okay, so let's throw some volume on here. It's not going to go back far enough for me. All right, well, this is what Peter's talking about, this big volume spike here. And if my chart went back far enough, it would show another volume spike in November. What's likely to happen is that we're likely to enter a phase where the market's just going to drift sideways for a while. It'll make a run at the highs, reverse, make a run at the lows, reverse. This could go on for quite a few weeks, actually. After that, if the formation tends to hold, there could be a stronger move to the downside. Because what this exhibits is a period of distribution. Richard Wyckoff, back in the 1930s and 40s, speculated that the market had a life cycle where there was a period of accumulation, or what he called accumulation, and then there was a period of markup when prices rallied, then there was a period of distribution and a period of markdown. Now, these legs would not always be equal. Sometimes the markdown period would be like this, and then you'd enter another accumulation phase, and the market would go up, and the whole cycle keeps repeating itself. You can see this intraday as well. It's not just something that happens end of day. You can see this on a daily chart, you can see it on a monthly chart, you can see it on a 5-minute chart. It's just kind of the nature of the market. The challenge, of course, is identifying which phase of the market you are in. So I think it's fairly safe to say that this has been a markup phase, but now that we're starting to drift sideways, the question is this going to be a phase of distribution? And if it is, then we may see the market try to head lower. Now, if you're somebody who likes to follow volume, and volume is a very good indication of when the market is getting tired or when it's stronger, what you're going to want to look for is you're going to want to look for the market to test the top end of this range. It doesn't matter if it goes through or if it comes up short, but it's going to test the top end of that range, and you're just going to have a tiny little volume bar. And what that's going to tell you is that there's not much interest in buying the market higher anymore. All the buyers are done. They're spent. And when that happens, then we're probably going to see a more sustained move to the downside. where we're going to break the low, we're going to retest, we're going to make another move lower, and maybe retest, the zone down here around 20,500, maybe even 20,000 even. And of course, all the talking heads on TV will have a field day with that. Everybody will be running around saying the sky is falling and what are we going to do? And really, in actual fact, that's just the life cycle of the marketplace. But that's a great question, Piotr. And I think, like I said, it's right now it's a little early to call, but that's kind of how things might be shaping up. Oh, Anthony says, I guess my theory didn't work out and hit my stop loss. Yeah, I know. It's one of those days where we should have seen a more pronounced move to the downside. It didn't happen, of course. It looks like the market's still trying to rally, but overall the day's kind of been sideways. So don't be surprised to see the market turn on its heel here now that we've broken through the highs of the day and tried to head lower again. All right, boys and girls, it doesn't look like we're missing a whole lot here, so I'm going to shut down the room for today, and we'll try this again tomorrow, and hopefully have a little bit more success. We'll talk to you then. Bye for now.